The rumor that Starbucks might sell its China business feels like more than just a corporate move. It's a sign of the times. Before we begin today's episode, please like, subscribe, and hit the notification for the latest on the struggle of the century between the US and China. US-China relations are strained like never before, and businesses are caught in the crossfire. For years, China has been Starbucks' second-largest market, a symbol of how Western brands could thrive in China's booming economy. But now, with tensions over trade, technology, and security spiraling, even giants like Starbucks might see China as a risk too big to handle. This potential sale comes as the U.S. considers ending China's permanent normal trade relations (PNTR) status, a move that could raise tariffs and disrupt the flow of goods between the world's two largest economies. It's part of a broader push to decouple from China, driven by concerns about national security and economic dependence. For Starbucks and many other American companies, the question isn't just about profits anymore. It's about navigating a relationship that's become increasingly hostile. If Starbucks pulls out, it would mark a significant shift, highlighting how businesses are rethinking their ties with China in light of worsening relations. It's a reminder that in today's geopolitical climate, no brand, no matter how global, is immune from the tensions between these two superpowers. Starbucks in China, a modern-day gold rush. Starbucks in China has been like striking gold in a land full of opportunity. When they opened their first store in Beijing in 1999, nobody really knew if coffee could take off in a country that's been drinking tea for thousands of years. But Starbucks didn't just sell coffee. They sold a lifestyle, a cool, aspirational vibe that made it trendy to sip a latte in a cozy cafe. And it worked. By 2023, Starbucks had over 6,000 stores in China, making it their fastest-growing market outside the U.S. The brand became a status symbol, especially for young professionals in big cities like Shanghai and Beijing. Grabbing a Starbucks cup became a way to show you'd made it, but like any gold rush, the shine doesn't last forever. China's economy is slowing, and people aren't spending as freely as they used to. At the same time, local competitors like Luckin Coffee are coming in strong. Luckin learned from Starbucks' playbook, but added their own twist: cheaper prices, tech-driven convenience, and aggressive marketing. They've become a serious rival, pulling customers away with the same products at lower costs. Then there's the political climate. As relations between the U.S. and China get frostier, there's a growing sentiment in China to buy local and support Chinese brands over foreign ones. Starbucks, as iconic as it is, risks becoming a symbol of Western influence, a target if nationalism ramps up even further. For Starbucks, China was once a smooth ride to success, but now it's looking more like a bumpy road. The challenges of growing competition, economic uncertainty, and political tension are piling up. And the question is, how long can Starbucks keep its spot as the coffee king in a market that's changing so fast? Why would Starbucks sell? Hearing that Starbucks might sell its China business feels like spotting storm clouds on the horizon. It's hard to ignore and makes you wonder what's coming next. Why would a company so successful in China even think about pulling out? Well, there are a few reasons, and they all tie back to how unpredictable the US-China relationship has become. First, look at the pressure from investors. Big businesses like Starbucks don't operate in a bubble. They've got shareholders breathing down their necks, worried about risks. With the U.S. and China constantly at odds, whether it's over trade policies, tech bans, or military posturing, investors are starting to see China as less of a golden ticket and more of a ticking time bomb. Remember when Tesla expanded aggressively in China? Now they're facing slower sales, political scrutiny, and increased competition from local brands like BYD. It's a reminder that even market leaders aren't safe from shifting tides. Then there's the push in Washington to end China's PNTR status. If that happens, it could mean higher tariffs, more red tape, and a lot more uncertainty for companies operating in China. Starbucks, which relies on importing and exporting goods between the two countries, would be hit hard. Costs could skyrocket, and profits could take a big hit. It's not just a business decision. It's about preparing for a future that might be a lot more complicated. And let's not forget the branding issue. In China, there's growing pride in homegrown companies, and Starbucks could easily become a symbol of Western dominance, something to reject, not embrace. In the U.S., the opposite could happen. If Starbucks is seen as too cozy with China, it risks backlash at home. Look at what happened to Disney when it tried to navigate similar waters, balancing its theme park investments in Shanghai while facing criticism in the US for being too dependent on China. For Starbucks, selling its China business might feel like cutting its losses before things get worse. It's not just about money. It's about protecting the brand from a perfect storm of economic, political, and cultural challenges. If they walk away, it would be a huge decision, but one that reflects the tough reality of doing business in today's world. The bigger picture. Starbucks has long been more than just a coffee shop. It's been a symbol of the engagement between the United States and China. When Starbucks opened its first store in Beijing in 1999, it wasn't just selling coffee. It was brewing a cultural exchange, blending Western business models with Chinese consumer culture. The company's rapid expansion across China showcased the potential for American businesses to thrive in the Chinese market, serving as a bridge between the two nations. For years, Starbucks represented the possibilities of a cooperative relationship. Even U.S. officials, like Commerce Secretary Gina Raimondo, have noted that while certain economic engagements with China can pose risks, companies like Starbucks have been seen as non-threatening. She highlighted the distinction between areas of competition and those where economic cooperation could continue, acknowledging the importance of finding balance in the U.S.-China relationship. If Starbucks were to exit China, it would be more than a business decision. It would symbolize the unraveling of economic ties that have long helped to stabilize U.S.-China relations. Economic interdependence has often acted as a buffer against political and military conflicts. The presence of American businesses in China and vice versa has created mutual interests that encourage dialogue and cooperation. The departure of a major American brand like Starbucks could signal a retreat from these shared interests, potentially escalating tensions. Without the soft power influence of such companies, misunderstandings and mistrust could grow, increasing the risk of direct conflict. The economic decoupling might lead to a more fragmented global economy, where the lack of interconnectedness makes diplomatic resolutions more challenging. In essence, Starbucks' potential exit from China could be a canary in the coal mine, indicating a deeper and more concerning shift in U.S.-China relations, one where the absence of economic ties removes a critical layer of stability between the two powers.